This is Mark the Meerkat in with a brief broad market review for March the 14th, 2018. I'm in here for Des. Been having some technical difficulties, so sorry about the late posting here, but let's take a look at what happened in the market here on Wednesday. Taking a look at the numbers, the S&P down 0.53. The Dow was down almost 1%. The Qs, they were just about break even there at minus 0.02. And the small cap Russell down 0.5% as well. And Bank, kabam, down 1.1%. Can't go anywhere without banks. That's a little more bearish, folks. And then we had the VIX also went down. Surprisingly, it was up during the day. But then look at gold and silver here, just kind of holding steady. And then we had the dollar here up just slightly. And the trend was at it closed at 1.35. It was bearish. No trend trade for our Grok traders. All right, let's take a look here at the S&P 500 daily chart, represented here by the SPY, which is the ETF on it. And we were in the symmetrical triangle, and on Friday, kaboom, we broke out of it with nice volume. If you look down here on volume. And Des said on the weekend video, hey, if this sucker takes off, we want to load up on our longs. What happened on Monday? It gapped up and pulled back. On Tuesday, gapped up and pulled way back. And then yesterday, gapped up and pulled back. So this is a very weak market right now. And it did all of that on, look at the volume down here. Lower than average volume, folks. So yeah, this market, we looked like it was ready to take off here out of this symmetrical triangle, but not. Well, Mark, why don't you put it up here? Well, technically, this is not a down leg here yet. We have to have two candles of lower highs and lower lows. We only have one. So, who knows what will happen here on Thursday. Until that, then we'll just draw it up here. Same issue that we had before. Let's look at the Dow Jones Industrials, represented by the DIA. And it is in a quote-unquote prettier symmetrical triangle, because technically this is a down leg, so that is the swing high right there. Why we have two that are lower and lower. Either way, we said, hey, if it takes off, let's go. It did not. Gapped up almost 100 points on Monday, pulled back. Gapped up yesterday, 100 points, closed down 200 points. And gapped up 100 points, closed down over 125 points. So, folks, and again, volume though here has been a little bit stronger than it was on the S&P 500. Either way, it's just, after having these huge swings, we're just really getting tighter and tighter here in our price action as the volatility comes out a little bit from the early February price action. Then we got the Qs. A little bit different picture here. They're been more bullish on Monday. It did break out to new all-time highs, and then on Tuesday gapped up and then ran down hard with big volume. Look at that. So I want to pay attention to this candle. Big volume there. So is it ready to take off to the moon? It doesn't look like it. Price, volume, and price and action and volume are telling me up. This is not ready to take off. We did set a new all-time high, but now it's pulled back 2 days, and again gapped up, pulled back hard, gapped up, pulled back hard both times. So people are coming into the market in the morning, anticipating a nice bullish move, and then it's bleeding out. And then we've got the small cap Russells. It looks very similar. It did come up here, and it just tagged yesterday, Tuesday, did tag. Look at it, it tagged the all-time high from back here in January. And then, it gapped up to there. That's where it opened. And then pulled back the rest of the day, and then pulled back. Yesterday, gap up, pull back. So this one is also looking stalled, but this one is on low volume as compared to the NASDAQ, which was on high volume on its pullback. So this one's looking a little bit not as bearish as the NASDAQ, but still struggling to get to new all-time highs. And then we take a look at Bank. Very similar here. This one is actually in a rising wedge. It went to new all-time highs here on Monday, and then gap up, pull back, gap up, and pull back really hard yesterday. Bank was down over 1%. So this one, don't have the volume on this one because it is an index. And then the VIX, we had this outrageous blast up here on the VIX here in early February, and this is the daily chart. Came down, started to get a rebound here when we started talking about the tax tariffs. It was news driven, pulled back, and now it just doesn't want to settle down here in the 15 and below area, which would be very mild, which it was for over a year and a half, 2 years. And then, but look at this, it's just floating here, just slowly coming back in, but not huge movements there. Gold, we are also in it's almost a falling wedge here. Again, the wild price swings, and now it's getting tighter and tighter and tighter. Could go either way, big time. Same thing with silver. Also now it's in a symmetrical triangle, and it could go either way, although with all these moving averages overhead, well, it looks a little more bearish than it is bullish to me. Well, that's it. So Des is in Florida and will be until next week, and he's actually meeting with some of our Grok followers, as well as meeting with several other people, and throwing a little pleasure in, I'm sure, as well. So this is Mark the Meerkat. Hey, just remember that two of the top characteristics of a winning savvy trader is discipline and persistence. Trade well.